Here we go. Welcome, everybody. This is the Thursday evening Viper trading webinar. If you are here to learn how to trade the futures markets using the Viper tools, you are absolutely in the right place. First, we got to knock out our standard disclaimer, get over some charts, and start looking at trade setups. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. Alrighty then. We're going to start off tonight with the Russell. So without further ado, let's go back over to screen 1. All right, we got quite a few people visiting us here on what's called a fall open house, where you can come kick the tires, and hopefully a lot of you take advantage of coming to the live trading room every morning through our links and invitations. And, you know, if you're somewhat new to trading or if you're somewhat new to futures, let me explain what you're looking at here. We trade intraday volatility on the futures markets. In the live room, of course, we have 4 instruments. They are the one you see here. RTY is the mini Russell. It is $5 a tick. So each tick of movement over here, say from 16 to 17, is 10 ticks. So 10 ticks. So each point is $50. Now, let me clean this chart off a little bit so we can really get, you know, sort of a flavor of what's going on here. I got some old lines left on here, so let's just remove all drawing objects. The predictors are the sort of bubble oval things that are support and resistance levels painting in real time. I'm going to take those off just for simplicity's sake right now. And what it is we're connected to a data feed to our broker, NinjaTrader brokerage, and we get our data feed, and that feeds us the instruments that we want to trade. Now, the other ones in the live room are YM. We'll be looking at YM shortly. That's the mini Dow, also $5 a tick. Now, I am showing you, for the most part, we're going to look at the September contract, but you have to know that rollover was today. So we're going to roll all the equities to the December contracts. So in that sense, futures from a contract expiration point of view have somewhat similarity to options. You know, you roll options depending on the expiration dates and what have you. So that's a similar event happens with the futures markets. So we're going to roll to December. That happens every quarter on the equities. So YM Mini Dow, $5 a tick. We used to have NASDAQ in the room. That we call that Spazzy Nazi. It has huge moves. So big volatility also brings with it large drawdowns. Okay, so we took that out of the room. It was too distracting. And I make calls on the E-mini S&P, which is ES, $12.50 a tick, $50 a point. We'll also be looking at crude oil, and we can look at gold. Those are the other 2 commodities that are in the room. Now, what you're looking at with this data feed is 4-range chart. We moved away from time-based charts many years ago, because we felt that time-based charts artificially sort of impinge the real underlying moves, whereas range bars give you the freedom to see, the real movement. You're not constraining it artificially by time. In other words, all these bars are uniform in size. If this was a minute chart, you'd have, you know, this handful of bars that are just tiny if there's hardly any movement. And then you get a minute or a 5-minute bar, it would just be huge, you know, if you get a big move. And so that really kind of throws the indicators off and is very difficult to trade, whereas the range bars make it a lot more clear. You can trade other things. People trade, you know, Renko bars, all manner of different kind of bars out there. We stick with the 4-range for continuity's sake. Now, I'm here in California. Today was September 13th, Thursday. So just to orient you on the chart, what you're looking at here, This is midnight my time. So you would adjust this, what you're looking at, to your local time zone. So, you know, if you're in the Midwest, add 2 hours. If you're back east, of course, add 3 hours. But the charts would look the same. Your midnight chart will look exactly the same with the same indicators. So we have background colors. We have, obviously, you can see bar colors, blue, yellow, and red. We have these swing indicators here, which mark the swing high and swing lows when they occur. See the dots? And then the most prominent thing, of course, on the chart is the bands. The mid band is the thick band in the middle. 1, 2, 3, 4 bands below it. 1, 2, 3, 4 bands above it. You'll hear a lot of reference to 3 things, and I'm going to highlight them here because they play a big role in our trading. Obviously, the biggest one on the chart here is the middle band, or what we call the mid band. There are a lot of trades that occur in and around the mid band, and that's the subject of tonight's webinar, as well as part 2 on Saturday morning. Now, you're also going to hear calls of things occurring around what's called line 6. Line 6 happens to be this line right here. And you're going to hear calls related to things that happen around line 2. And just so you know, everybody's on the same page here, line 2 is located right here. This is line 2. So here's how it works. This is band number 1, band number 2, line above band number 2 called line 2, the thin red line, right? Band number 3, band number 4, mid band, thick band in the middle, band 5, band 6, line on top of band 6, green thin line, line 6. And then, of course, you have band 7 and 8 is the outermost band. We like the bands. We went to using these bands many years ago because they give the chart some form and structure. If you just had bars up here without any kind of coloration, without any kind of you know, bands or anything of that nature, it would be very, very difficult to see trades. And so that's why we use these tools to make trading decisions. Up here also, we have power meters. These are 4 different trends on the chart, short-term to long-term. And, of course, you saw the predictors. You can toggle them on and off. That's short-term to long-term resistance. Now, when we say mid-band trade, let's talk about what a the term mid-band trade actually means. So right here, I'd say this is a perfect example of a great mid-band setup right here. Right here. This is perfect. Now, why is that such a good mid-band trade? Well, let's blow it up and talk about the details of what makes a good mid-band trade. Excuse me. Let me do a quick sip of tea. Hold on. First of all, let me state the obvious. You can see that the bars are just resting just slightly above and below. I mean, they're more or less sitting right on the mid-band. Okay, that's by definition a mid-band trade. Notice how also that you have a pattern that has formed here that is the tops and bottoms and wicks of the candles are all very clean and tightly sort of packed together here. The third thing is that the size of the box is very good. For instance, you have support at 1720 and resistance up here at 18 even. So the size of the box is right around 8 ticks. Now, you can get boxes that are slightly tighter than this. I've seen boxes as tight as, you know, 6, 7 ticks. With the 4 ranged bars, it's hard to get tighter than that. And generally speaking, you don't want to take a mid-band trade where the box is, and we'll look at examples of this, where the box is huge, like, you know, 10, 12, 14 plus ticks. Those are going to be boxes we want to avoid because they won't be clean to identify where to get in. And it tends to be breakout trades and prone to head fakes. Okay? Now, I'll get into the details of this in a little bit, but let's talk about why you want to take mid-band trades and how they work. And they take different forms. So, for instance, the first thing we need to do when we start trying to decide what types of trades to take is determine what the market condition is. And most of you in here have heard me say this, you know, if you've been around for a while, 1,000 times. And what does the market condition mean? That's the first pop quiz question. What does market condition mean? Hey, what's the market condition? I don't know. I don't know what the heck you're talking about. Okay, if I was going to put that up here, and I have to fill something in underneath of it, what would it be? Is ... Okay, I got to type something in here. What is it? Before we can take any trades, we have to know what the market condition is. What are we talking about? Is that like, I got to condition my hair before I go trade? I got to get a 2-in-1 shampoo so my hair is all, you know, in perfect condition? Got to make sure that the market's in a good mood? What the heck are we talking about market condition? Okay, I see some answers coming in here. Eddie, I see your question. I will get to that. If you can, let me just get through some material here, and then if you can later in the webinar, just remind me of that question before we wrap up, and I'll address it. I'm not ignoring you. Yeah, okay, so I mean, in a nutshell, you put in here, is the market trending or not, right? Whatever market you're looking at, whether it's, you know, the Russell, so we all know there's 3 conditions, right? We know that you can be in an uptrend. We know you can be in a downtrend, right? And we know you can be, I'm just going to put it in here, sideways. And there's different ways, you know, to you know, range bound, consolidation, sideways. By definition, it's lack of trend. However, there are conditions where you can be sideways to up. There's conditions you can be sideways to down, and you got to know how to trade those. Now, if we were to look at the Russell here, on this chart right now, of the 3 choices, if you were to type in a letter to define this market from here to over here, would you type in a U for uptrend, D for downtrend, or S for sideways? The Russell on this chart right now that you're looking at. U for up, D for down, S for sideways. So here's how it's going to work. Most of you notice that my style is very interactive. Okay, so I've always learned over the years of teaching trading that, you know, when people participate, you know, you don't feel like you're just sitting there getting barked at all night long, and you know, told what to do or whatever. You know, I'm going to ask a lot of questions. I'm going to make sure that you participate and that you figure all this out, because it's been proven for a long time that the extent that you participate in things like this, you learn and retain the information much longer. So if you can, you know, when I ask questions, it's not like rhetorical, like, oh, I wonder, is it up, down, sideways? No, that's an actual question. What is your opinion? Is this up, down, or sideways? And the obvious answer is up. So when you have an uptrend, the characteristics are generally going to be higher highs, higher lows. Color of the background is going to be mainly green. Most of the bars should be shaded blue with some occasional yellow ones and occasionally a red one coming in there. And so we are what you call retracement type traders. Let me go back over here and put in here that for the most part, when you are in an uptrend, you take long trades only. For the most part, there's exceptions to that, and that's certain times of the day, or news comes out, or, you know, market V tops, V bottoms, market reversals. So there are exceptions to that, and we'll look at some of those tonight. Generally, when you're in a downtrend, you're taking only shorts, right? This is really simple stuff. Most of you know this, but it helps to go over it again, especially for anybody who's new. And then sideways, sometimes you can trade both ways. Or I'm going to say with a caveat of or directionally if I'm just going to put sideways to trend. If you're in a sideways condition to, that was the thing I was saying earlier. If you're sideways to up, here, let's look at an example. Let's look at a couple quick examples. Okay, so here the trend is up. Okay, we're coming up, green, higher highs, higher lows. We trade pullback retracements. Now you could make the case that in this area right here that I'm circling, that you were sideways to up. The trend is still up. However, in this area right here, you could definitely make the case that you were sideways for a little while, right in here, right? So this would be a condition where, yeah, okay, for this period of time, you were going sideways, yes. However, you were in a trend sideways to up, and so you are still buying retracements into support. Now, when we say we're retracement traders, what does that mean? So let me ask it this way. So here we can see in an uptrend, the thrusting direction of the market is in an upward manner. So here would be an example of a thrust. So that means that you go and you buy up here. This is the buy point when it gets to the peak of the thrust, right? That's where you want to get in. That's where you want to pull the trigger and hit a market order right there, right in that circle, right? Trend is up. It's going to run. It's running. You're going to miss it. You got to get in at the peak of a thrust in an uptrend. That's how we do it. In a downtrend, you short the thrust down. It's with a market order. That's how you get in, right? Most of you are typing in no. Absolutely not. We have to wait for a pullback into support on an uptrend, and that is correct. So that is the definition of retracement trading. Thomas B says, are you out of your mind? Are you nuts? Are you crazy? So here's our thrust up in the uptrend, yes? And here is the retracement. You can call it retracement, you can call it pullback, you can call it whatever you want it to, but the bottom line is that you are pulling back. So one thing is really important, I know a lot of you still get stuck in this, and I did for years, is you never, ever want to buy or sell a thrust move. Let me put that in caps. Oops, I'm supposed to be in caps. There's a thrust in a trend. Now, I know a lot of you are still getting, you're getting stopped out like that, right? And I understand the reasoning behind it, right? Over here, here's the thinking. You're watching the market go up, you're watching the market go up, you're watching the market go up. And then right when it gets all the way like up in here, you're convinced it's going up. Here, let's go back and replay this like we don't know what's going to happen. Here it's going up. Here it's going up. It's going up. You're watching it. You're watching it. You're waiting. You're thinking, hey, I better get long. But you're hesitating. You're hesitating. And sure enough, by the time it gets all the way up to here, you are convinced the market's going up and you better get in. And sure enough, right when you pull the trigger up here, market order, how to limit, however, by hook, by crook, you're long up here. The market immediately starts pulling against you like this. Goes up, hits it again. You're like, it's still going up. It's going to break. And then, maybe you're filled up here at this 1210 area or whatever. And then you feel against you. And then you start saying things like conspiracy theory things, like the market knows you got in. Every time I pull the trigger, Charles, the thing goes down against me. They know I get in, and I always get stopped out, and I hate it. I hate you start slamming, throwing, swearing, throwing stuff around all over the place. Is that anybody here? Well, I hope that didn't confuse you, David. I mean, you know, I just said 3 times before the last 20 minutes, I said we are retracement traders, and then I tried to pull a switcheroo on you and say buy and sell a thrust. You should type in you're nuts. That's not where you get in. A couple of you are typing in that's me. So here's how you break that. You got to break that. If you're in that cycle, and look, I've been trading a very long time. Okay, over 20 plus years. And I can tell you that even today, I still feel that little twinge to want to get in when the market's moving up. It's natural. You're fighting your natural body and eyes looking at something, compelling you to take action, and you have to fight it. Because sure enough, as soon as you pull the trigger up here in that thrust move, it's going to start pulling right against you. And if you had a 12-tick stop, you got taken out right about in here. Sure enough, market forces and conspiracy theories are working against you. Here's another full stop out. And as soon as it takes your stop, it sits right here on the mid-band. And what does it do? Right where you got taken out. What does it do? It bounces and runs all the way back up. So the only way you can, and there are lots of different traders. You're going to hear all sorts of different trades called in the live room. We teach all kinds of different trades, and I'll show a couple more tonight. I'll show you how that works, and we'll show you how to take them and what have you. But if you learn mid-band trades, you can make a lot of money. And so let's look at some other examples. There's a couple examples here. This is a classic sort of ABC type pattern that happened here. We retraced, we retraced, we come just above the mid-band. We get, by the way, the reason I'm drawing these region boxes here, and some of you are going to embrace this tool and some of you might not, is we have a tool called Object Trader. An Object Trader is chock full of goodies. But one of the main parts of the tool that we use is called the region box. So, for instance, when you see Gary in the room saying put a box there, or you hear me call it put a box there, or he draws a box around wherever the market is at, and what we're showing you is that if and when you come join the Viper team, you will get access to this tool called Object Trader. It is a semi-automated trading system. Semi-automated simply by the fact that all you have to do is draw a region box, engulf the candles, and when the market closes outside of it, there's different ways to do it. You can do bar close, you can do touch, close above, all manner of different ways to get in. You can learn how to use this tool. It's fantastic, but that's what we're showing you where the trade is. Okay, so now pop quiz to make sure you're still awake. I'm going to ask a series of questions to see if everybody in here is grasping this material. And I'll give you 5 seconds. These are yes/no questions. Yes/no questions, 5 seconds each. Is this a mid-band trade, yes or no? Three seconds. Y or N? Well, that's all. You just hit a letter. Boop. I mean, it takes us less than a second. Is it yes or no? 2 seconds. 1 second. Time's almost up. So is it a mid-band trade, yes or no? Time's up. Yes. Yes. The correct answer is yes. That is a mid-band trade. Now, compared to the other mid-band box that sat right on the mid-band, yeah, it's a little higher than mid-band, but it's still acceptable. Let's look at some other examples. How about this retracement right here? Is this a mid-band trade? Yes or no? Right here. That box. Is that a mid-band trade? Yes or no? So we can't take mid-band trades unless we know what they are, right? I mean, if I was to come up to you on the street and I'd say, hey, Thomas, good to see you. Are you going to go ahead and take that mid-band trade? And you might look at me and say, I don't know what the heck you're talking about. What the heck is a mid-band trade? You got to know what one is before you can take it, right? 2 seconds left. Is this box a mid-band trade, yes or no? Thomas is laughing. All right, time's up. I would say no. All right, and here's why. I would go so far as to say, and it's a matter of definition, you know, and what have you. Clearly, this is a mid-band trade. That if the bars are sitting in the band located immediately above the mid-band or immediately below the mid-band, this would, or of course, sitting right on the mid-band. This is your mid-band trade right here. This is a mid-band trade. This is a mid-band trade. Now, what is this trade called? It's still a trade. Okay, you know, if you said that's a trade, you know, you're right. It is a trade. This is what we call a shallow retracement trade. Okay, shallow retracement trade. It's characterized by the following. Can you see the green sneaky snake line here in an uptrend? The little green sort of snaky line that's called stealth. Had that thing forever since day one. That's right. It's a line 6 shallow retracement trade. That's right, Paul. Yeah. See how the bars do not go into this band above the midband? See how they remain above it? However, they are located below stealth, check mark 1, and they close below line 6, the thin green line. So it's a bona fide retracement trade, yes, to the long side. That is correct. However, it is not considered a mid-band trade. It's considered a shallow retracement trade. I know it's a fine point on it, but that's how we deal with it. Now, I'm going to ask a different question. Is this trade down here a long trade or a short trade? Type in L if you think it's a long trade. Think S if it's a short trade. Four seconds left. Just an L or an S. That's all you got to put in. Hit the L, boop. Hit the S, doop. Done. Simple as that. 3 seconds on the clock. Long or short? Is that a long or short trade? 1 second. You should be getting these, right? Everybody should start to see these. I'm going to mix this up. After this, I'm going to another chart, and the questions are going to get more difficult, and we're going to look at all manner of different types of trades. This is a long trade. So here's what's going on. And it's good that we have this because we're showing 3 types of trade all on one chart. We all agree, we've all took the pinky swear and said this is an uptrend for all the definitions that we talked about. Green background, higher highs, higher lows, blue bars, bands stair-stepping up, all the bands, mid-band stair-stepping up. We understand right now pretty well how a mid-band box works. The band immediately above and below the mid-band are considered mid-band trades. And of course, sitting right on the mid-band. We know that. We just learned what a shallow retracement trade is. That falls just under line 6 in stealth and bounces as such. Legitimate long, shallow retracement trade. Now, over here, let's talk about what the definition of this is. Occasionally, you're going to see this in some markets, is that you get what's called a deep retracement trade. You might even hear something in the room like a phantom. It's called different things. We've called it different. We used to call it probe trades. We called it, you know, I mean, if you go to our old, you know, webinars, we called it different probe things and different things over the years. The bottom line, it's a deep retracement trade. So what does deep retracement mean? Let's give you some definitions. Okay, deep retracement trade, or phantom. Sometimes it's called a phantom depending on when it actually occurs. In the case of the uptrend, what happens is that the depth of the retracement goes beyond the midband, and occasionally it will go to line 2 or the outermost band or line or band number 2 right here. The thing that's the most confusing about this is twofold, and as I've learned this over the years, is that visually it's challenging because the bars have turned to red. People think that when you see this, traders think that when you see this, that this implies a trend change. So if that throws you off, this type of trade might not be for you. Okay? There's all kinds of trades in the world to take. Some of them you're going to like, and some of them you're going to be good at, and some maybe you don't like, and some you're not going to be good at. Right? That's just the way trading works. This is a deep retracement trade because the trend is still up. It's not broken. Now, let me explain this. If it comes in a deep retracement, comes up, hits its head around the midband as it did right here, it continued up. Trend continued up, obviously, but hypothetically, if it didn't do that and it rolled over and broke support, now you have a bona fide trend change and you're looking to trade to the short side. So, deep retracement trade, phantom trade, it's one you can learn. It's good to have it in your arsenal. I would practice and sim on it until you get really good at it before you start taking live money trades on it. Simply because, for the various reasons, the bar color change, the fact that it's gone beyond the midband. I think most people are comfortable with retracements that sort of fall even in here. These are all midband trade setups right here. Here's another one right here. You can just sort of see where the boxes are going, right? How about this right here? Is this a legitimate long trade right here? How about right here? Yes or no? 5 seconds. Is this a legitimate long trade? Yes or no? 4 seconds remaining on the clock. Just a Y or an N. Is that legitimate? Yes or no? Now, don't let that sway you, the fact that it made money. Okay, it made money going long. That I will not dispute that. It popped up and went to a fresh swing. No question that trade made money. No question. However, by the definition of our minimum shallow retracement requirements, did it meet the minimum requirements for shallow retracement? Yes or no? I just covered it a few minutes ago right over there. You can still see it. You can still see it on the chart. All right, 1 second. Time's almost up. All right, time's up. From a technical point of view, I would say no. Simply because this bar right here closed above line 6. See, contrast what I'm trying to say. Let me put it to you this way. Contrast this retracement in this circle with this retracement here. Right here. What's different between those two? In the first circle, did the bar close below line 6? Yes. Well, it closed below. You have this bar here closed below line stealth. Check mark 1. Did this bar close below line 6? Yes or no? No, it didn't. It closed up. So from a technical point of view, in terms of our definition, the answer is no. Now, you might say, well, Charles, look, that thing, made 10, 12, 15 ticks. That was a beautiful long trade. Well, look, in big, long uptrends, you may get shallow retracements like this, where, you're kind of on the cusp. Should I take this? Should I not take this? Why do we have that requirement? Guys, I see questions coming in here. Tom, David, I see peppered with all manner of questions. Just hang tight with those, okay? I'm trying to smoothly get through some points here, and then I'll circle back and answer, all right? I don't want to punctuate the teaching here with, I see your questions, and we'll get to them. I'm not ignoring you, okay? Here's why. Let's look at these two retracements independent of each other. And I'm going to start with this one. Now, at the time that this retracement started to set up, what is the distance between, and this is the reason I'm explaining to you the reason that we have these rules. We just didn't willy-nilly say, oh, well, you know, this is line 6 of the thing and stuff, and let's just say that's the way it's going to be. No, there's been a lot of thought put into this. How much room, if you get filled long on, say, this candle right here at 0860, how much room is between here and the top of the current resistance range? How much meat on the bone is there from here to here? By the time you take into a little bit of slippage and commission in here, let me blow this up a little bit more. Slippage and commission, you got to fade that to get out. What is that? 4, 5, 6 ticks maybe? 8 tops? Take away your commission, put a little slippage in there. There's no meat on the bone. There's no meat on the bone. And there are many, many times, if you go and study, take your instrument that you trade and go study this, where you'll get a head fake like that. It'll kiss this. You're barely filled. You're up a couple of ticks. And gablango, bammo, right in your face. Right? So what we're saying is, let's contrast that with the other one that's over here. And I'm just trying to explain how you can, you know, sort of visualize what a market's doing and why we have the rules we do. Let's look at this situation here to the right. Here we have a condition where we came off of mid-band trades. We see that right here. We covered that. Thrust retracements. So we're not paying attention to this. We already talked about that. Here's your next thrust. You're coming up to the swing, 1250. It hits it right on the button. And now here's your retracement. It's pulling back. It's pulling back. It's pulling back. Okay, now you're closing below stealth. You're closing below line 6, and you're all the way down here to 1060. What is the distance between these bars? It's locking up on me. These bars down here and the swing high up here. How many ticks are you looking at from there to here? Well, I mean, depending on your fill, say 11, 1130, 1120, all the way to there, that's at least 12 ticks, 13, depending on your fill, because be as much as 14 ticks. So there's meat on the bone. And furthermore, I would submit to you that if you got a head fake, unlike this one over here, this one panned out, but we all see that if it was a true head fake and it blammoed in your face and stopped you out, you would have to hit the close button to get out. In this case right here, if it came up, let's say to here, and then blammoed, you would already had a scalp out. From here to here is 9 ticks. You've already taken one or two contracts off, and you've taken your 12-tick initial stop to within 2 ticks of your entry. That's how we teach that, right? Does everybody see what I'm talking about here? That's why we like the mid-band trades. In trends like this, we like the mid-band trades because look at the distance between here, you know, down here at 1050, 1060, whatever, and the top is up here at 12. You're almost 20 ticks. So when we talk about low risk, high probability trades, that's why we like mid-band trades. They're obviously better than shallow, and they're not quite as challenging as the deep ones. That's why I got to tell you, mid-band trades are pretty much my go-to trade. I love those. I take them every day, all day long. That's my go-to trade. If you learn mid-band trades, you can make good money trading futures. You can, seriously. I'm not blowing smoke there. Thomas, you see that? William, you see that? Everybody see this? Any questions? I'm going to come off of here, and now we're going to go to a more complicated chart. This kind of had all the goodies in one shot. We had a couple of shallow retracement trades. We had an illustration of a deep retracement trade in an uptrend and how to take that. We showed a couple of mid-band trades and how it would work using Object Trader with the region box, and we showed a good definition of a shallow trade retracement. Any questions on these trades? Okay, let me circle back here. Richard, how do you know it closed above with only 3 colors? How do you know where it closes? Well, you can tell where okay. I've never heard that question, but let's look at it. Let's do some bar closes together. If there's still a question on that, make sure we're all on the same page. Let's do some bar close questions. Let's do easy ones first. How about this bar right here? Did this one close? And now you're gonna type in U or D. U means the bar closed up. D means the bar closed down. And I'm going to put my cursor on just a quick handful of bars, and we're going to do this together. All right? Okay, this bar where I'm putting the cursor on right here, did it close up, U, or D down? That one right there. Right here, pointing to it. In fact, let me circle it. This one right here. U for up, D for down. Did that bar close up or down? That one right there. 2 seconds. You should know this. This should be no-brainer stuff here. Time's up. Up. How about this bar right here? U, up, or D down? This bar, I'm circling it with the cursor. That one right there. U up, D down. Right here. 2 seconds. Type in a letter. 1 second. This bar closed down. How do we know? How do you know that a bar closed up or down? Well, if the wick of the candle is above where the bottom of the candle is, then it closed down. In the case over here, if the wick is underneath where the close of the candle was, well, then clearly it closed up. The wick tells you where it's closing, okay? Yeah. So in the case down here, when we discussed the minimum shallow retracement trade requirement, and we said it's got to close below line 6, as it did over here with the shallow retracement trade that met the criteria, with the virtue of the fact that this bar closed up and not below line 6, did not meet the minimum criteria. Did everybody see that? Look, I'm just, like I said, I'm going through some fine points here. Trading is all about discipline and rules. To be successful, you have to have discipline and you have to have some rules. If you don't have rules and discipline, you're not going to make it long term. You just aren't. You're going to be flopping around like a fish, and the big boys are going to gobble you up. Tom says, oh, wow, I just had a light bulb moment. I know you base your methodology on taking retracement type trades, but it just hit me that retracements are not all created equal, and that's where the lines come in. They can be defined by the lines in time and space. Yes. So I'm glad you had an aha moment there, Tom. Exactly. So that's how a good way to think of it is this, and we don't want to make this overly complicated. But you do have to have some form and structure. So that's what the bands are doing for you, okay? And that's why I said earlier that the decision points generally happen around the midband, in and around line 6, and in and around line 2. In the case of line 2 in a short, and I'll show you examples of this, the short definition, it's got to close above line 2 and a red stealth, which we'll look at, and then roll over and go short. In the case of a deep retracement in an uptrend, and that's why this is a little confusing, that's a deep retracement to line 2, and you're actually buying that bounce. A lot of people struggle with that. If you struggle with any of the trades that we show, and this is a yes or no question, say we show, I don't know, 3, 4, 5, 6 different types of trades, all manner of different types of trades and how to get in. And let's say that 4 of them you don't like. You've tried them, whatever. You did them in sim. You got bit a couple of times live. Should you take those trades? Should you take trades that you don't like and you're not good at? Should you take those? I mean, that might sound like a stupid question, but it isn't, because I talk to traders all the time that still do it. No, the answer is no. Just because we show something doesn't mean you have to do it. Just because you hear a call in the room doesn't mean you need to take it. We have traders all over the world that use our software, trading all sorts of different markets all day and night. Forex, currency futures, bonds, notes. We have to show all these different trades because everybody needs to use the tools. But if you look at yourself, you look deep down in yourself and you say, I'm just going to use an example. Look, Charles, I understand this is an uptrend. I've seen deep retracement trades a million times. I know I should be taking them, but every time I take one, it doesn't work out and I get hammered. Well, my response is, well, then don't take them anymore. Anyway, all right, enough said about that. Okay, so let's do this. What do we want to see? We got about 10 minutes left. Let's try to get a couple more charts in. Let's type in just type in an instrument you want to see. Do you want to see YM? Do you want to see crude oil? What do we want to show next? You want to see some gold? What do you like to trade and what do you want to see? I'll take a vote. Whatever the vote is, that's what I'll put up. By the way, most of you know, of course, this is recorded. We will put it on the web. We'll put it in the members area tomorrow morning. This is part 1. I'm trying to basically sort of covering the basics of all of this. Now on part 2 on Saturday morning, I'm going to really do a deep dive into more detail on how exactly to take these trades. Well, we got quite a few YMs coming in here. We got one crude and a couple of ES votes. All right, so YM gets the day. Stand by. Let me pull over YME chart. By the way, in the room, when you hear the term YME, you know we're saying YM, right? Everybody knows that. We have sort of little nicknames for our instruments, crude abilio, gold, Goldie, whatever. That's just, trying to break it up, have a little bit of fun and humor in the room. All right, let's do this exercise a little bit different. I'm going to bring up a YM chart, and I'm going to show you, I'm going to advance the chart from this morning just like it happened in real time, okay? And this is a good exercise you can do on any chart. I would strongly urge you, if you want to practice, you can do market replay. You could do what I'm doing here, push the market back and forth, and then sort of decide what's going on. So that when the market comes, bars are coming in real time, and you're saying, what the heck do I do? This exercise will help. So here's what we're going to do. I'm going to start here. I'm going to start. I've done this before, and everybody sort of likes this one. Now, don't type in now because I haven't advanced the chart. 6:30 is the open of the equity markets in the States here. So that would be right there. Equity markets open, and this is what YM look like. Yeah, the friendies, our little friendies. We joke about these markets all the time. When you do as much trading as we do, you got to break things up, or otherwise it's going to go crazy. All right, here we go. We're going to do an exercise where I'm going to advance this chart. I'm starting at 638, and when you think you see a trade, and I'm going to help you out, it's going to be a long trade. Okay, I'm just going to take that right off the table. The trend was up this morning, right? And so you take long trades only for right now, right? I'm going to start advancing the chart, and you type in T or L when you think you see the trade set up that you should or could take from this morning. Here we go. Okay, there's 640, 642. Let me blow this up a little bit. Get the bars a little bit bigger. Okay, there's 643. Okay, 644. Okay, let's blow it up a little more so these bars get real nice and big. There we go. That's much better. There you're at 645. Remember, when you think you see a trade set up, you're going to type in a T or an L for long. Trend is up. You're taking long trades only. Okay, right? Okay. 645. 646. Keep it going here. 647. 649. 650, coming up on 7 a.m. Pacific. About 20 minutes, 22 minutes into the trading session. 652. 654. The market's heading up. 655, almost at 7. To get the bars even bigger. It helps to see when the bars are big. 658, 2 minutes from 7 a.m. Pacific. 659. There's 7 o'clock. Okay. Coming at 7 o'clock. I don't think we had any news at 7. I think we did. Okay, I'm going to go ahead and stop it right there. All right. Now, I would say that was pretty good exercise. That was a pretty good exercise. Let me tell you some observations of what was good. None of you, anybody, typed in L or T for a long trade as this thrust was occurring right here. Nobody did that, and total kudos and good stars, gold stars to you, because I thought somebody, as this was going up here, would have typed in a T or an L for a long trade, and nobody did. So, gold star for that. That's it, and frankly, between all of us here tonight, that's one. If you take this away to not buy or sell thrusts, that alone is going to save you a ton of money on stop outs. Okay, it just is. Now, some of you, not all of you, but a chunk of you, typed in a T when this area formed these bars right in here. And that was correct. So, question to the team. Do these bars meet the minimum criteria for taking a long trade in a retracement, yes or no? Yes. Of course it does. Did it close below stealth? Check mark 1. Did it close below to line 6? Check mark 2. Did it form a nice little region box here? Double, triple check marks. A big handful of you saw this and typed in T's and L's. Perfect. Now, some of you typed in a T and L a little bit late, like when these bars were forming like over here. And that's okay, because the way I looked at that was that maybe after these bars formed, and then these two bars formed, and then these were forming kind of right around line 6. How would I put it? The folks that saw this are what I have termed early adopters. In other words, they can look at a bar formation, they can look in relation to the bands, and instantly tell whether they should take a trade or not. We all need to strive to get to this level of anticipation and seeing the trades. This is what's going to make you money. When a market, any market, doesn't matter what it is in a powerful, strong uptrend and it gets a shallow retracement like that, this is the formation you are looking for. Any combination of this. So I think what happened, the delayed reaction that I saw, was that some of you saw this, and then as it kind of dinked around line 6 here, it occurred to you, hey, that's a trade. And then you typed in a T and an L. And that's perfectly acceptable because that was good, and you got in and the trade worked out. Now, when it comes to this area, some of you typed in a T or an L when this bar formed right here. And that's good. That's your early adopters coming in. Most of you typed in T's when this bar formed right here, when you saw that bar form after this bar here, these 3 bars, which is good. And then a small handful of you typed in bar late, like when these bars were forming. And nobody typed in up here, which is good because that's the thrust. If you don't want to get in up here because here you missed the trade. You don't, right? We know that, right? You don't chase it. The trade was here. So we know, we're not chasing it up here. We know that. Everybody's in already, right? Okay, good. Now, I think it's probably a similar situation as the ones that typed in the T and the L here, that we're typing in T and L here, because what happened was after the fact, you looked at it and you said, oh, geez, look, I had this bar touch the midband. This bar closed below the midband, and this bar closed up above the midband, and there was actually a trade right in here. Now, in addition to the box, there is another way to get in and another way to visualize this on your charts. It is as it follows. And I'm almost out of time. I'm going to show this and then we'll wrap it up. You can take a ray. You can put the ray at the top of your swing and then put it over the wicks and the tops of the candles of the bar in the ABC, whatever, of the retracement. And when it comes above that ray, that's where you want to get in. So it would be you'd be getting in long on the close of this bar right here. I've shown this before. I will show this in more detail on Saturday morning, how to make use of that ray in addition to the box. And we'll also different ways to get in using limit orders. You don't have to use, you can use, there's different tools you can do to get in. And we'll talk about that in more detail on Saturday morning. But that's okay. I mean, even if you're seeing it, like that's what I'm saying is you still get the gold star and the kudos and the pat on the back, because even though you're seeing it a little bit late, the fact of the matter is you saw it was a trade. So all you have to do is hone your skills to see when a market is hitting the sweet spot of where you want to get in and then step in and pull the trigger. Now, when you're in the live room in the morning and everybody's all trading together and we're looking at the markets together, Gary and I are calling these levels out and taking the trade. So we're helping you see it. But in order for you to get good at it, you should do what I'm doing here, okay? Pull the chart back, advance the chart a little bit. Now you see it. Pull it back, advance a little bit. Now you see it again. Do it on another chart. Do it on another instrument. Pull it back, advance it a little bit. Now you see it. Pull it back. Just do that. Do that like a dozen times. Take 5-10 minutes out of your day and do that half a dozen, 2 dozen times. And I'm telling you, you're going to see this a lot better. Do it down here. Look, here we can see trend was up. What was it doing here? Right at the open. Sideways to up. Where was support? Yeah, right here. Put a line right there. Held it every time. Came right to 15 and bounced every time. If you bought 15 right after the open, you made money on every bounce. Here, 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 all of them. And then you took off and you had a runner. Last question and we're done. Ready? I'm going to do one more tricky question before we wrap. Okay, I didn't do any shorts, so I got to throw a short in there. Markets have been going up for so long. I mean, it's hard to find shorts. Let's see if I can find a short trade setup for you. Ready? 5 seconds on the clock, and this is the last question, and we're going to wrap. Is this a legitimate short trade, yes or no? Right there. 4 seconds. Just a wire and in. It's the final question of the evening. Three seconds. Legitimate short, yes or no? And then we're going to wrap. Two seconds. Time's almost up. One second. Yes. Yes, that's a legitimate short trade. Now, there were some comments that came in that said something to the effect of it's a little more risky because the midband is green, and that is correct. And the timing is a little bit odd because you are located right at the close of the market. The close of the market's at here 13.15, you probably wouldn't have taken it because you're like literally a minute from the close. So, you know, would you've taken it? Did it roll? Did it kiss the midband and roll? Yes. Yeah, that's a legitimate one here. Okay, good. So, you know, if I want to summarize this, it really comes down to this. In an uptrend, you're going to get shallow retracements that are going to fall into this zone here, just under line 6. We know that now. We know that midband trades can occur anywhere between these two bands right here, and of course right on the midband itself. I'm talking about uptrends now, not downtrends. And that deep retracements, let's look at some examples. So would this be a deep retracement on an uptrend? Yes. That can come as deep as the line 2 right here and still be considered an uptrend, right? In a downtrend, let's see if I can go find some other downtrends. Now here's a good example of a downtrend right here. When you're looking at a downtrend, the reverse is true, right? So shallow retracements, is this legit? Yep. Midband trades and downtrends would be located in this area right here, these two bands, and of course the midband itself. And then deep retracements in a downtrend can go all the way as far as line 6 and still be considered legitimate. And the bars might very well turn blue in the downtrend. Excellent. Thank you, everybody, for sticking around. I know I went over. Let me stop the recorder. I hope this helped. This is